So if you want to know where real estate prices are going, there's a really, really good hack. And it's about looking at the direction of interest rates. A lot of people think that real estate is about the actual real estate, but it isn't. Real estate investment and real estate prices move with interest rates and the direction of interest rates. And so what I'm always looking at is two things. They are my guiding lights when it comes to where real estate prices are going. And that is the cost of money in the US and the cost of money in Australia. These are called bond yields. And bond yields are just a measurement, a live market measurement of the cost of borrowing for different governments. So if we're talking about the US bond yields, we're talking about the rate which the US government borrows from in the market, or the cost of interest rates in the US government debt market. And so what had been happening over the past 6 to 12 months is towards the end of 2020, interest rates started to rise from historically low levels because there was an expectation that the worst of COVID was behind us, and they started to go up, as you can see here on the screen. We had the initial hit. The cost of money in the US came down in May 2020, the height of the pandemic. It sort of plateaued, and then towards September, October, rates started to go up in the US. However, they started to come back down. And this is really important. And what this tells me is that a lot of the positivity around the US economy coming back, a lot of the expectations that things would become more expensive are starting to be pared back. There are issues with the Delta variant. And these issues mean that interest rates are actually now starting to come down. If we have a look at what's been happening in Australia, we can see a similar trend. The RBA in Australia is actually taking the foot off the pedal, and there's expectations now that they won't be raising for even longer. What does this mean for you? This means if you're worried about interest rates rising, you shouldn't be. We might have small rises in the short term, 2 or 3 year rates, because they've been very, very low. But if you're making an investment and thinking about the next 10 years, the market is actually showing us where those expectations are. And the rates, 10-year rates for Australia and 10-year rates in the US and all around the world are starting to come back. They're not going up. They're starting to come down because there are still issues out there. We're not past this pandemic. The Delta variant isn't improving. There's going to be challenges to the world economy, and rates can't rise until those challenges are worked through. We're still in lockdown as at the time of this recording. And so watch these very closely in your real estate investing career. And you might not understand them straight away, but keep a watch, because all you need to do is look at the direction. Are the Australian 10-year bond yields or the rate on Australia's debt when it's borrowing in the world going up, or is it going down? If it's going up, chances are interest rates in the market and the borrowing market are going to go up. If it's coming down, it's going to mean the opposite. And so if you can buy an investment today, piece of real estate in a great city, close to infrastructure, brand new, has all the amenity, and you're getting a yield of about 4 or 5%, that's actually a standout investment because the cost of money is coming down. Interest rates are likely to remain low for a very long period of time. And that investment is going to put money in your pocket, it's going to be sought after, and it's probably going to rise in value because of that.